Moving on with the third part of our project here, trading binary options with the Bollinger Band indicator. And on the first two parts, we looked at how to apply the indicator on the chart, on the screen. The same principle can be used for if you use the MetaTrader and not the J4X here. It is exactly the same. The Bollinger Band on the MetaTrader is to be found on the trend indicator, trend indicators category. Here on the J4X, it is to be found, or it is found on the overlapping studies. So after you apply it on the screen, the standard interpretation is that every time market is or the distance between the upper Bollinger Bands and the lower Bollinger Bands here is quite small, the market is preparing for a break. You wait for the break to happen, and then if price is trending into the upper part of the price of the Bollinger Bands between EMA and the upper Bollinger Band, you go and buy call options as long as when price is reaching the EMA, looking or taking into consideration the distance between the Bollinger Bands, the upper and the lower Bollinger Bands. This distance needs to be quite considerably bigger than the one before the breakout. Here is still bigger, as you can see, so you go and buy call options. But here, I'm not buying anymore the call options because the distance there between the upper Bollinger Band and the lower Bollinger Band is quite small. Let's look at some bearish examples here. As you can see, this is what is happening again as market prepares for a break here. You wait for the break, and the break is coming, as you can see, and then you want to go and buy put options because price it is in the lower part of the channel here. But we are not going to buy the put options here because price just closed above the EMA. So you want to look and to see a hesitation on the EMA. So we're not going to buy the put options here. But nevertheless, this is the break to the downside. So not here because price closes above the EMA, and you wait for the market to come into the bearish. Remember the bearish outcome. So this is bearish here. Like this, and then you wait for price to come into the bearish situation. So you just go and buy put options every time price is reaching this EMA with the distance between the upper and the lower Bollinger Band to still be valid. So those are area you want to buy put options. And of course you might ask, okay, when to stop? Well, you stop when the distance between the upper Bollinger Band and the lower Bollinger Band, it is quite small here. See the distance. So even here we may even go and buy put options. As price is not closing here above the EMA, the distance here is quite nice. So you have 1, 2, 3, 4, 5 hours for your option to expire, and then price explodes higher. But we were waiting for a break here, all right? By the time price explodes higher, then we are looking to buy call options every time price is reaching this EMA. As you can see, price comes to the EMA, fails to break the EMA or the middle Bollinger Band. The distance between the upper and the lower Bollinger Band, it is still bigger than the distance before or the distance at the break here. And then you go and buy call options. It is that easy, it is that simple. The only thing to take into consideration is the break that is coming, and then in order to have an idea or an educated guess where to buy them put or call options, you need just to be disciplined and respect some rules. On the last part of this project that is going to come in any minute now, we will take a look at another situation or another thing to consider, or a signal, if I may say so, where to buy put or call options, but stay tuned for that one to come in a couple of minutes. Thank you for being here. This is binaryoptions.net.au, and we're just having an educational series how to buy, call or put options, or to trade binary options using the Bollinger Band indicator.